Hello friends, in today's video we are going to learn how to create a loan schedule and how to calculate EMI. This video is going to be very interesting because with this you will be able to take smart financial decision by creating this EMI calculator. This EMI calculator will and the loan schedule that we are creating will give you exact idea of how your cash flows will look like over a period of loan tenure. So basically we will split the numbers into what was the principal component in a particular month in your EMIs, what was the interest component, how the running balance of your loan account will look like, and you can stimulate the numbers by making changes to the loan amount, the interest rate, then EMI start date, disbursement date, and so on. So let's look at it. So first of all, please create a table view which I have created on the screen like this. So the first section will be inputs, wherein you will have to put your loan amount, interest rate, disbursement, tenure, like that. You may not need to follow exactly the same format, but something similar you can create. Then there will be one output section wherein we will have some static outputs, and then you can create a table like this wherein you will have dynamic outputs. You can give names like this, which is basically the EMI date, interest component, principal component, and a running outstanding balance. You can either put borders, or maybe you can leave it as it is, no problem. So let us put some inputs first. So let's say loan amount is rupees 60 lakhs. Then tenure, let's say 20 years. Then interest rate maybe 8.8%. Then EMI start date, we can take it as 7th of April 2026. Then your disbursement date. So disbursement date is also important. So let's say you take disbursement of the loan on 30th of March 2026. Now days in a year, it should be 365. We will keep it static for calculation purposes. Now the first important part of this video will be output. So the first output will be the exact EMI amount. So the formula for EMI calculation is PMT. So we'll say equal to PMT, open parenthesis. Then the rate will be this interest rate cell you will have to select, then comma. Then NPER is basically the loan tenure. Here what we will do is we will select the tenure cell, multiply it by 12, that is 12 months. Then comma, PV is present value, that is basically the loan amount. We will close the bracket and enter. So in rate, one thing you will have to take care of is when we say this formula calculates EMI, that is equated monthly installments. So whatever interest rate is given, you will have to divide it by 12 to arrive at the monthly rate of interest. So we make C9 divided by 12 to provide the monthly interest rate. Now as you can see, because the EMI is an outflow, Excel by default returns the negative amount. You can simply put the minus sign at the beginning to make it positive. So this was your first output. This is going to be your EMI amount. Now let's see what will be the EMI end date. So EMI end date will be basically you will pay 240 EMIs, right? So the first EMI will start on 7th of April and the last EMI should be 7th March 2046. But instead of putting it manually, we have seen end date formula, E date formula in the previous video. So we'll put equal to E date, start date will be 7th of April 2026, comma. Now we will open another bracket, loan tenure, that is 20 months multiplied by 12 minus 1, bracket complete. So this will be my EMI end date. Now total outflow we will come here towards end of this video. Now let us look at EMI date. So in the first cell you will simply click equal to and give reference to the EMI start date. But second cell onwards, what you are supposed to do is are supposed to put EDAT formula equal to the cell just above this second cell. I'm sorry, equal to EDAT. Then select the cell just above the current cell, that is B17. I will be selecting, comma months will be 1. Enter. Now to make it error proof, we will just put it as if error, comma 2 colons for blank return. So this is how the formula will be. Now simply copy this formula and paste it till the end. Like I have created this table till row 256 something. In the interest of time, row 265. This is where I have created this is the place till which I have created the formula. Here one tweak we can do is we will put if function also. So as you can see here, dates are coming endlessly. Like if I copy this and paste it till end of this Excel file, you will see dates everywhere. Like I have just copied and you can see that there are dates, but I don't really need this. So what is the best way to deal with this? I will show you. Let me go up to row 256. So as you can see, a lot of manual activity is going on, which is unnecessarily boring and time consuming. So I will show you something very simple. You can put if function here, like in the formula that we have already put. So if error we will keep as it is and we will put if function. Now if EDAT B17, 1, if EDAT B17, 1 is either less than or equal to EMI end date, then you just have to go and copy this EDAT formula. Then EDAT, else blank, bracket close. So let's see, I think we'll have to put some more parentheses. So we have put if error, if EDAT B17, 1 is less than or equal to E13, we will freeze this cell. Then take EDAT B17, 1. Otherwise make it 0. So let me first close if formula, and now I close if error formula. So I think this should work now. Yes, it has worked. So I will now simply copy this and paste it here. So as you can see, last date of the EMI. This is where formula had stopped. So here instead of less than or equal to, I will just make it less than. Let's see. Okay, so this is how it will work. Now I will make it less than or equal to only. Let me go back, less than or equal to. Yeah, so we are good with EMI date now. Now running balance will be in the first cell you will put loan amount minus this principal component, and then for second cell onwards say like just above minus this. So basically we are deducting the principal component of the recently paid EMI from the previous date's loan balance, and here also we will put if error and blank. Now for interest component, the interest amount in component in the first EMI will be basically disburse the interest rate for the period between your disbursement date and EMI start date. So what we will do, we will calculate interest component. So that will be equal to our loan amount, which is basically the outstanding amount, multiplied by interest rate. Okay, this gives me interest rate for the entire year. Now I divide this number by 365. That gives me interest rate per day, and now I multiply all of this from EMI start date minus disbursement date plus 1. So this gives me my interest component for the first EMI. Principal component will be my EMI minus my interest component. So this is how the first cell, the first row should look like. Now for second period onwards, what I will do is I will simply copy this formula here, and for loan amount, for principal, that is C8, we had selected the loan amount. Instead of that, what we will do is we will select this E17, that is basically the previous balance. So I make it as E17. This selects running outstanding balance. Multiplied by C9 will be my interest rate. Let me freeze this cell because this is a static one. Divided by E10 is basically days in a year. So this also I want to keep static because I have only one cell here. Now multiplied by E9 minus C10. So instead of E9 and C10, what I will do is I will calculate the days between previous EMI and current EMI. So instead of E9, I will make it as B18, and instead of C10, I will make it as B17 plus 1. So now this is my interest component. And now for principal component, what I will do is simply EMI minus interest component. So let me make this field static because my EMI number is fixed. Now here I will simply put if error function. So if error, I put the bracket, comma, blank. Again here also I will put if error, just to make sure that the cells are clean as we go down. So I copy this and paste it. Now only one thing, as you can see in this formula, you are seeing this false here. The false returned by Excel, and there were some numbers here. That is because for this if function we did not put the error handling, or what we call it as value if error function, in here. So I have just modified this formula and put it. So let's look at the formula once again. So I'm saying if error. So if there is any error in this entire function, then Excel should return blank. So that is first outer condition. Then after if error, I am putting one bracket and I am starting a new function called if. Here I am putting two brackets. One is If E date B17, 1 is less than or equal to E13, that is basically if the previous date, if the previous EMI date is either less than or equal to the EMI end date, that is E13, then Excel should return uh, previous EMI date plus 1 month, that is E date B17, 1, else Excel should return blank. So that is the only modification which I have made. Again, this is optional, this is just for additional learning. So and again I have put the if errors everywhere. So actually this is how my uh, loan schedule will look like. Now the last cell that was pending was this total outflow field. So this is simply what you have paid as a EMI in total. So what is the total outflow? So equal to EMI multiplied by my tenure into 12 months. So 1 crore 27 lakhs. And I will just make it like this. Yeah. So you bought a home for 60 lakh rupees. Let's say this was a home loan. And you have paid 1 crore 27 lakh 71,000 against this home over a period of next 20 years. Now all these fields are editable. For example, you can change the loan amount, like I make it, let's say 50 lakhs. I change the interest rate to, let's say 8.1. Then I change the tenure to 15 years, like this. And if you go down, sales are automatically getting either blank or sales are getting filled. This calculator will help you take right decision in terms of loan. You can decide what tenure to choose, which bank to go with, as this directly affects your pocket. And that's all for today's video. In upcoming videos we will see how to make it more dynamic and to make it possible to incorporate prepayment of loan. Like let's say you suddenly pay 10 lakh rupees somewhere during the year, somewhere during the loan tenure. What if you want to reschedule the loan, like let's say after 5 years you want to reschedule it to only 10 more years instead of 15 more years? How to incorporate those changes, we will be definitely covering that in upcoming videos. If you have liked my channel, like this video, please hit the like button, subscribe to my channel and share this more and more. Thank you.